Hello guys, in this video I will try to explain why some stocks are expensive, others are cheap. Okay, now what happens in real life happens in stock market. Something that it is expensive, it means it has a value that it is expensive. Something that it is cheap, it has the value of cheap things. Now, let's see, for example, when you speak just normal thing, why the car, a sport car like Bugatti, Italian car, is 2 million and a half, and why other cars are like 40,000 or 100,000? This is because the sport car has a value of 2 million and a half because it has a lot of features and the engine is very powerful, and only the few people, and they can make just a few people of these few cars of this type, of this brand or this model. Okay, that's why it is expensive. And in the stock market is the same. Okay, now let's see the same industry that we are in the last video, which is the internet information providers, which is an industry, and it belongs to the sector of internet. Now this is the whole sector, okay, and the whole industry. This is the whole industry, as you can see here. We try to see an example of an expensive stock, not just very expensive, but it's a little bit expensive, like Google, for example. Here is Google. Now, why Google is 906.57 today, which is Friday. Okay, Friday. Let's see the date today. It's a Friday, 2nd of August. Friday, 2nd of August, 2013. Why Google is 906.57 cents? It's because this stock is a big company that it has huge earnings. It has huge earnings, and the people they like the search engine of Google better than Yahoo and better than the other competitor. Okay, before we have what we call Yahoo.com, which is the predominant search engine at the time, and we have others. They compete, but when Google launched its search engine, it becomes one of the biggest companies in the world, or biggest search engine in the world. Now there is a very hard competition, but since Google, with its Google AdSense, is making a lot of money, and it has all the market of the market, which is the business ad. That's why Google is too expensive. But Google wasn't that expensive when it begins. So we go to the past, we go to yearly. Google has begun with, it opened with $100 in the end of 2004, okay, in the stock market. And you can see $100, it goes to $95, and then in the first year it goes to $192.79. Okay, the first year it nearly doubled, because the people, they find that Google search engine is so powerful, and almost all the people use it, and the people like it. It means it's a special. Google is a special. It's very powerful. It begins very small, but when it goes to the market, it's the leader in all the search engine. That's why They take all the money of the market, and investors, they feel that Google has a future. That's why they buy it. Okay, it's not 100 shares that the people are saying are buying. People are putting millions of dollars, and mutual funds are putting billions of dollars into this Google stock. That's why it goes high, high, high. Some years Google doesn't do good, but beginning with this year, 2013, we see that Google is doing great. It is the leader in the internet information providers. What I told you before, I always tell you the same thing. You should find the leader and stick to it. This year, Google has made a very good progress. So those people who can buy this stock, they can go and invest in this big stock. Okay. Now we return to the daily. Okay, we go to the daily. We go to Google, and you see that the beginning of the year, like the 8th of February, we see this big spike with the big trend here. That's why I told you before. So Google in the internet information providers industry is a leader. Some people, they told me, oh, give me a leader, give me a leader. This is a leader. But some people, they can't buy it because it's too expensive. So you should go and search for some stocks that are cheaper than Google, but still they are expensive. Okay? Now we go to other stocks that are cheap. Okay, this stock is 62 cents. It's called Look Smart Ltd. This is a laggard. A laggard is a stock that is losing money. The company is losing money. It cannot compete. So some people, I don't know what's their objective or something. They are looking for these stocks that are going down, 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 and they are buying them. I don't know why. People, they, in order to make money, they go to the leader, and some they can go to ladder, the laggers, and they think they can make money. So it's up to you. If you want to make money, you should go to the leader. Not only one, but you can find a lot. Let's search for some others. So we see Google, which is very good. We can see LinkedIn Corporation, which is all the people put their business profiles there, so they are making money. So it is a leader. So the people who are investing, they invest in this stock. It's a leader in the internet information provider. Okay, it's a leader because it's one of the first, and it pushes the industry. Let's go to the industry. It pushes here the industry to the top. So Google and LinkedIn, they push the industry up. Okay, that's why this industry is going to make a lot of money. Hope this continue, because we don't know the markets. It's just we see the price and we can make conclusions, and we trade or not we trade. Okay, so we go back to our the stocks that do nothing, like this one. It's called JRJC, which is China Finance Online. So it's $1.30, and we can see its history. See the history, like in 1 year. We see this stock. It begins with $15, and now it is $1.30. What do you think this company will go? Do you think this company in 3, 6, 9, 10 years it is going down? Do you think that in future years can go up? Maybe, but still it has lost all its money. Now in 2007, the stock was $47.68. Okay, it's 47. Now it is $1.30. Okay, so are you going to buy this stock and to invest it or trade it? No. Who will do that? Someone he's not he doesn't know what's going on in the stock market. Okay, so go back again to the good stocks like Google, like LinkedIn. See, LinkedIn has only 3 years in the stock market. The first year it was 63. The second year it was 114. Okay, it doubled like Google. Now the third year, from 114, now it is $235. You see how the good stocks are. These are the companies that the investors are putting their money, mutual funds, and all the people, they know that this stock is doing good because the company is doing good. It has a lot of earnings. Hope with this video you have a great idea about what is a leader, what is a good industry, and what are the bad stocks or the bad companies that they lose money, and what are the good stocks that they get a good money.